Think about the word capitalism. For some people it feels powerful. For others it feels cold. For many it feels distant, like a system too big to touch. Yet every day, without noticing, we live inside it. We buy things. We invest savings. We work for companies. We depend on markets to move food, energy, and materials. And at the same time, we hear that climate change is accelerating. Storms feel stronger. Heat feels heavier. Seasons feel confused. So a quiet question appears. Can the same system that helped create this problem also help solve it? At first, that sounds almost impossible. But before rejecting the idea, it helps to slow down and look closely at how systems actually behave. The context is important. Businesses are not people. They do not wake up with guilt or hope. They are machines made of rules, habits, incentives, and skills. They are built to repeat what they are good at. If a company has spent decades making one product in one way, its people, factories, and supply chains are shaped around that goal. Change feels risky. Even when leaders understand the future is shifting, the system resists. You can see this resistance in many industries. Cars built around engines. Energy built around fossil fuels. Buildings built around cheap materials. Finance built around short-term returns. None of this is evil. It is simply how machines behave. They repeat what works for them until something forces a shift. This leads to the first insight. Businesses do not change because they are asked nicely. They change when the environment around them changes. When costs rise. When rules change. When customers choose something better. Expecting every company to transform itself out of pure responsibility is unrealistic. Some will. Many will not. They are doing exactly what they were designed to do. That design is powerful, but also limiting. Think of a large ship at sea. It cannot turn quickly, even if the captain sees danger ahead. The ship needs time, space, and pressure from outside forces to change direction. Companies are similar. This brings us to the second insight, the hidden assumption. We often assume financial markets think long-term, because money sounds serious. But most markets think short-term. Daily returns. Quarterly results. Annual bonuses. This shapes behavior in subtle ways. If success is measured today, then tomorrow becomes less important. Climate change is slow compared to trading screens. Its costs arrive later. Its damage is spread across people who are not in the room. So it becomes invisible inside price signals. Pollution is treated like it is free. Damage to nature is treated like someone else will pay. This is what people mean when they say the market ignores external costs. But these costs are not external to real life. They show up in health problems. In damaged land. In rising insurance prices. In unstable supply chains. The bill exists. It is just delayed. And delay creates illusion. The illusion that profit today is clean. The illusion that growth today has no shadow. This illusion cannot last forever. When the damage grows large enough, it returns to the economy like a storm returning to shore. Crops fail. Infrastructure breaks. Cities flood. Productivity falls. Long-term investors understand this better than short-term traders. If you own a piece of the whole economy, you cannot escape the damage. There is no safe corner. This leads to the third insight, the structural pattern. Systems change when incentives change at scale. Individual good intentions are not enough. What matters is alignment. When policy, capital, and innovation point in the same direction, change accelerates. When they pull in different directions, progress stalls. This is why policy matters so much. Policy is not just rules. It is a signal. It tells businesses what the future will reward and what it will punish. If pollution is free, pollution grows. If pollution has a price, behavior changes. Not overnight, but steadily. Companies start planning. Engineers start designing differently. Investors start shifting money. Policy does not need to control everything. It needs to set boundaries. Like lines on a road. Inside the lines, competition can thrive. Without lines, the fastest drivers cause crashes. When climate damage is priced, the market starts to see what was invisible before. Suddenly long-term investments make sense. Suddenly clean technologies have a fair chance. Suddenly patience becomes rational. This is where the reframing begins. Capitalism is not one fixed thing. It is a set of rules written by people. Those rules can be rewritten. The question is not whether markets can help, but under what conditions they help. When the goal is better, not just cheaper, markets can move very fast. Better means cleaner. Better means more reliable. Better means more useful for people. When a solution is not only green but also works better, adoption explodes. You can see this pattern in daily life. People did not switch to smartphones because they were told to be responsible. They switched because smartphones were better. Faster. More useful. More enjoyable. Once that threshold is crossed, change spreads on its own. The same can happen with climate solutions. Solar and wind became dominant when they became cheaper and more reliable. Efficient lighting spread when it became affordable and pleasant. Electric mobility grows when it becomes quiet, convenient, and cost-effective. Better unlocks scale. Scale drives cost down. Cost down drives more adoption. This loop is powerful. But some solutions are still early. Heavy industries. Long-distance transport. Cement. Steel. Aviation. These areas need time and patience. They need capital that is willing to wait. Not because it is charity, but because the payoff is long-term stability. This is where large investors matter. Pension funds. Sovereign funds. Endowments. They exist to protect the future. If climate damage threatens the future economy, then investing in solutions is not idealism. It is self-protection. Now bring this down to daily life. It can feel distant to talk about policy and capital. But these forces touch you quietly. Through energy bills. Through product choices. Through retirement savings. Through city design. You may not vote on every rule, but you influence demand. You choose where money flows. Even asking questions matters. Asking where your savings are invested. Asking what a company plans for the future. Asking whether a product is built for short-term gain or long-term value. These questions send signals. They may feel small, but many small signals together create pressure. And pressure moves systems. The optional deepening is to notice your own relationship with time. Climate change is a problem of time. Short-term comfort versus long-term safety. Immediate profit versus future stability. We live in a culture that rewards speed. Fast returns. Fast growth. Fast answers. But some of the most important things move slowly. Trust. Soil. Forests, stable climates. When systems forget this, they break. Relearning patience is not passive. It is active. It means choosing durability over quick wins. It means valuing resilience. It means understanding that not all progress is loud. Some progress is quiet and steady. When you align your expectations with that pace, frustration softens. You stop asking why everything is not fixed yet, and start asking whether direction is changing. Direction matters more than speed at first. Because once direction is right, speed can increase. Capitalism will not save the climate by accident. But it can be guided. With clear rules. with honest pricing, with patient capital, with a focus on better solutions. We have done this before. We changed systems that once seemed permanent. We solved problems that felt impossible at the time. The tools exist. The knowledge exists. The question is not whether change is possible, but whether we choose to design for the future we want. So when you think about the systems you depend on, what rule would you most want to change so that the future becomes safer for everyone?